The president now warning that tariffs are coming for phones and consumer electronics, downplaying a pause as merely a procedural step. China, meanwhile, hiking its own tariffs to 125% while calling Trump's actions a joke and showing no signs that it's ready to negotiate. We get the outlook for global logistics too, speaking exclusively with the DHL Group CEO, Tobias Mayer.
Take a look at how Asian futures are setting up right now, pointing to the upside early in the Asian session as we continue to watch the offshore yuan holding at that 728 level against the U.S. dollar. Remember, 4 weeks of losses already for the Chinese currency, both onshore and offshore. We have seen central bankers, both from China, Korea, Japan, everyone gathering in Malaysia just to discuss these tariff implications for monetary policy. Nikkei futures pointing to the upside of 0.6%. We heard from Japanese officials saying that they will not be using the potential of offloading treasuries in these tariff negotiations going forward. Remember, there was a lot of speculation, of course, on what China might do with their purchases of treasuries that really spooked the treasury markets as well. And Heidi, we saw those losses last week when it comes to U.S. sovereign debt.
Take a look at how we're setting up when it comes to US futures. And of course, there are signs that this move upwards when it comes to US equity futures as a result of this idea of some of these exemptions. President Trump, of course, now pushing back against that narrative, saying that it's just more of a procedural step, that this could see that rally fade quite quickly, a little bit firmer. So we are seeing that relief that smartphones, electronics are being exempt at this point, that tariff stay applying. But it does look like they're looking at those supply chains, and that could very much impact the next move that we see ahead. We are looking at Asian stocks, though, as you say, particularly those electronics and tech-related names, seeing at least a boost in today's trading session. Let's get more on that top story. Bloomberg's Tyler Kendall at the White House is with us. Garfield Reynolds leads our Markets Live Asia coverage out of Sydney. Our Chief North Asia correspondent, Stephen Angle, is joining us out of Hong Kong. Great to have you all. Tyler, let me start off with you. What did we actually hear from President Trump in terms of these exemptions that he doesn't really want to be characterized as exemptions, and how permanent or impermanent could they be?
Yeah, so President Trump is saying that, quote, no one is off the hook, as it does appear that these tech imports will be subject to a Section 232 investigation, which could take weeks or months. So it's unclear how long that reprieve will actually be in place. We have to keep in mind the original executive order that President Trump signed on April 2nd always excluded things like chips, lumber, copper, pharmaceuticals, these industries that could be subject to Section 232 tariffs on the basis of national security concerns down the line. It now appears that these tech imports, including consumer electronics, will now fall under the umbrella of the sector-specific tariffs instead of the umbrella of the so-called reciprocal tariff plan. We heard President Trump saying that they're just moving these tariffs from one bucket to another bucket. Now, with that said, when this White House has invoked Section 232 before, including for steel and aluminum tariffs, on auto tariffs, they put into place a 25% baseline tariff when it comes to that. So let's say, just for the argument that potentially that could be the tariff rate that goes into place on these chips and these chip supply chain products that go into them, that would be lower than what they were facing, including that now 145% tariff across the board when it comes to China.